So if you think about the trade war and tariffs which US has been which they announced last Saturday, and then of course they've delayed the tariffs against China, against Mexico and Canada temporarily, but they've gone ahead with the tariffs against China. It's instructive to remember that this is not the first time that the US has done this, correct? In 2018, President Trump did this again in terms of implementing tariffs against China. And the slide that you can see here, both on the left and the right, show you exactly what happened the last time around. So the light green line at the top is the US total trade deficit. And as you can see on this chart, starting from November 2014 till date, it has only gone largely in one direction. The general trend has been upward. The blue line that you see below that is the trade deficit with China. Now, what you can see over there is a sharp collapse in the trade deficit, but that's really the pandemic impact. Post-pandemic, it pretty much fully recovers back to the pre-pandemic level. So did the tariffs that the US implemented against China have any impact? Slightly debatable, but what you can see is that the blue line doesn't fully recover to the previous peak post-pandemic. It sort of settles down slightly lower at about, when you need to look at the left scale over there, it settles down at about $300 billion vis-a-vis the previous peak of about $400 billion. But what appears to have happened is that during this intervening period, a lot of China-based production actually ended up moving to some other countries, primary beneficiaries being Mexico, Vietnam, and few other countries in Asia, the so-called China plus one strategy. And therefore, the gray line, which shows the US trade deficit with certain emerging economies, goes up to the extent that it completely covers the reduction in trade deficit that happened vis-a-vis China, which is why when you look at the top green line, even though the US tried to rein in the deficit during President Trump's administration in 2018, the US has not really benefited in terms of a reduction in trade deficit. All that has happened is that the trade deficit with China has come down to some extent, and that trade deficit has moved to other countries where it would appear that China has transferred some amount of its production capacity. This is also visible when you look at the chart on the right-hand side, which is that China has lost share in US imports, which is that blue line that you see, and it starts to come down. Actually, even before the tariff started from sometime in 2016, the share of US imports starts to come down. But if you look at it in another way, what is China's share in world exports? It turns out that China's share in world exports has continued to go up. What this means is two things. One, maybe China has managed to reshore some of its own production to other geographies who have exported it to the US. And secondly, China, just being so competitive, has managed to gain market share in other parts of the world as well. So net, the conclusion from this slide, the China export machine remains very, very formidable. B, they seem to have managed to shift some of their production, even US facing production, to other geographies, and which is why neither has the US trade deficit come down as a result of the 2018 tariffs, and China's dominance of global manufacturing is intact. Moving on to the next slide. What actually happened when President Trump came the last time and did these tariffs? In 2018, you can see on the left-hand side, one is the reaction in the dollar, which is the yellow line, and the other is the reaction in the US 10-year bond yield. Now, when the trade war first started, it was a textbook reaction. People worried about the impact on inflation. The dollar started to move higher. 10-year yield started to move higher. But at some point of time, even before the pandemic, things started to change. There was a growth scare in the US. Yields started to fall, even though the US dollar remained very, very strong. So the question is, going into the current round of trade war, the setup looks very similar, except because we already know what happened the last time around, you can actually see that both the US dollar and the US yield start to spike even before President Trump gets elected, right? Because by September, October, the market started sensing the probability of a Trump victory was high, and therefore it actually reacted right at that point because they knew that tariffs was the favorite, or rather a beautiful word as President Trump has described it, and you see the similar response come through. Will we get a growth scare? Will USD yields roll over? We'll just have to wait and see. Every time is slightly different. It never really rhymes perfectly.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.